What was the initial thinking or events that led to the manager change?
The performance at Temple Bar had been really very worrying. It had underperformed its benchmark by a very substantial margin. And then the most important member of the management team had to retire due to ill health. So the board had very little option really but to question whether the current, the replacement management arrangements were to continue to be in the best interests of shareholders. And we decided that we would have a study as to whether the investment management style was correct and whether the investment management arrangements were correct. And after a very prolonged, thorough and deep investigation into both, we decided that the style was still a good style in terms of rewards for shareholders, but it was important to change the management arrangement.
Very interesting. Glenn, how about you? What were the events or the initial thinking that led to the change?
Nearly the same, actually. We had started underperforming in 2016, continued underperforming in 17, 18, and 19. And the challenge for the board, that when underperformance occurs, it could be temporary, it could be structural. And the challenge for the board is to identify which one of these things it is. And that's really what we spent most of 2017 and 2018 trying to do. But as part of that, we benchmarked our then manager against what was available in the market. And that was really how we got to changing the manager.
Yeah, that makes sense, that benchmarking. Susan, what were the initial issues that made you change manager?
Well, in common with other investment trusts, we had annual strategy days. And at our strategy day in January 2019, the picture was looking a little bit gloomy. We looked at underperformance numbers over 1, 3, and 5 years, a persistent double-digit discount. Witten Pacific was the only remaining trust in its sector. And the sector itself, the Asia Pacific, including Japan sector, was not in demand when looking at the relative statistics and cash flows and sizes on the open-ended fund sector. And as an actively managed fund, the board felt that underperformance could not continue indefinitely. So we made an announcement shortly after that strategy day in February 2019 that if underperformance were to continue over the 2 years to the end of January 2021, then proposals would be put to shareholders, which would include a cash option at close to net asset value.
That was a very bold statement from the board.